Hey folks, it's Simon here with your Tao Daily for 22nd of November 2024. Today I thought we'd just do a bit of a mini deep dive into the S&P 500 or the SPY ETF that tracks the S&P 500 and just see whether the bulls or bears have got the upper hand. Now, the index is within a whisker of all-time highs, so that kind of tells you that we're in a bullish environment, right? There's nothing bearish about it, an index or a symbol that's trading at all-time highs. Now, if we look a little bit more objectively, you can see that the index is forming a pattern of higher highs and higher lows, all right? And if this is indeed a new low, which is looking hopeful, we should make a new high, or at least challenge the previous high. So trend sequence looks strong. Gaps. What are gaps telling us here? Well, we had a breakaway gap here. This was election day. The election day gap that hasn't been filled. This little gap, we had a little gap down here as well. That has been filled. All right. So the bearish gap has been filled. The bullish gap hasn't. That lends argument to the idea of short-term bullishness is the path of least resistance here as well. Thirdly, we're going to look at things like Fibonacci retracements. All right, if we just run some fibs from that swing low to that swing high, we can see we found support right on the 50% retracement. All right, you can see how it basically touched that level 3 times, found support, and now it looks like we're moving up again. So that's another little vote in favor of the bulls. What about the advanced decline line? So the advanced decline line is a measure of stock market breadth, and so far that is tracking price. All right, so that's neither bullish nor bearish, but it just reinforces the idea that what's happening here is the market is performing in a constructive manner. Another way we can look at market breadth is looking at RSP, which is the equally weighted S&P 500, and you can see that handily outperformed the S&P yesterday. That was up 1.26% versus the S&P up 0.54%. So more than double the performance. So that's a sign of health as well. Andrew's Pitchfork. This can add some structure to the order of a trend. This cyan line in the middle is called the median line, and if price is above that line, that generally means we're in a strong trend. And you can see how these other median lines, which run parallel, have done a pretty good job of defining support and resistance. And it looks like we've just bounced off this median line here, which again suggests the next point of contact will be the upper sort of halfway median line here, this dotted line. All right, so that's a vote in favor of the bulls. If we look at some indicators, all right, we've got trend structure. We've got what I call rainbow logic: red, orange, yellow, green, blue, violet. So that is bullish. If you look at where this 50% Fibonacci retracement came back to, it was the top of this box. It was the previous high, which was acting as resistance. Previous resistance becomes support. So that's kind of bullish as well. Probably the most bearish thing I could say right now is that if we run Fibonacci's from that swing high to that swing low, I'll just zoom in here a little bit. If this is a sequence of lower highs and lower lows, i.e. the start of a downtrend, this little rally here has failed at the 61.8% retracement from the all-time high. All right, so that's probably about the most bearish thing I could say right at the moment, but you combine the technical picture with bullish seasonality, I would say the bulls have definitely got the edge here. I hope it helps. I hope you have a great weekend, and I'll catch you next week.